Let's have a quick review about UpCrunch. And the big question is, can you really trust UpCrunch this year for your business loan? Can you really get any amount, any decent amount when you go through UpCrunch? And what are your approval odds? Let's quickly talk about that. So this will be a quick review of UpCrunch this year. So what is UpCrunch? Let's first talk about that. So if you think about UpCrunch, you don't have a direct lender. Okay. So if you want a direct lender, don't go to UpCrunch because UpCrunch is actually a loan marketplace. It's a lending marketplace, which means what? It means that when you apply through UpCrunch, you get multiple offers. And then it's up to you to actually go through those offers and see which one fits your business profile, but also your funding needs. Okay. So UpCrunch remains a lending marketplace that offers unique business lending in the sense that everything is customized. Okay, in other words, basically you have to put they have a soft pull process, so you can pre-qualify real fast. So without any damage to your personal credit score. So they'll ask you a few questions and you can reply to those within 2 minutes. And once you actually, and you can, by the way, you can apply for a maximum of $2 million. Okay. But if you want more, if you want a larger loan amount, you actually have other loan marketplaces such as LendU. So UpCrunch does the same thing like LendU or Clarify Capital or National Business Capital. Those are loan marketplaces, okay? And one thing I love about UpCrunch is that they're really fast. They're really fast. The company started nearly 10 years ago. Okay, they started in 2016. They were based in LA. Okay, but I like the fact that they're really fast. You can actually get funded within a day. You can be funded within a day. So if you apply in the morning, let's say morning Pacific, by the time you get to 5 p.m. Pacific, you actually get you can have the loan the loan proceeds actually being wired to your business account. Okay, so this is really important. So I just want to really understand here is that they actually will fund all industries, unlike other loan marketplaces that have restrictions for some industries. UpCrunch is pretty open. They're pretty accessible to all industries. So let me talk to you about the small business loans that you can have through UpCrunch. Okay, how do those small business loans work? One thing you need to understand is that when you go through UpCrunch, you have access to different kinds of business loans, including term loans, business lines of credit, revenue-based funding, equipment financing, and invoice factoring. Now, one thing I realize is that UpCrunch sometimes they take out of their loan offers traditional term loans because they want to focus more on collateralized business loans. Because if you think about revenue-based funding, equipment financing, or invoice factoring, those are collateral business loans. Okay, collateralized business loans. Same thing for SBA loans because the SBA loans are guaranteed by the federal government up to 80%. So you are only putting 20% down, but the federal government is actually guaranteeing a maximum like a 4/5 of the loan, which is really good. It's a what I call it's a lower risk loan for the platform. So let's first talk about the business line of credit. So if you apply for a business line of credit through UpCrunch, you are getting paid, not getting paid. You are borrowing a maximum of $250,000. So that's 1/4 of a million, and you have to repay this actually over 3 years. Okay, and you can be funded within 24 hours. What about SBA loans? So SBA loans actually allow you to borrow a larger loan amount because, like I said, basically the loan is it's prominently guaranteed by the federal government through the SBA. So basically, up to $5 million. Okay, and terms from 10 to 25 years. So that's really cool. And one thing I want you to really understand here is that if you want to apply for a business loan through the SBA, you cannot actually apply directly to the SBA because the SBA is not a bank. The SBA is a small business administration. It's an agency, but the agency actually partners with lenders such as UpCrunch and others to make sure that those loans are available. So basically, if you go through UpCrunch, you can have loans such as the SBA 7A or the 504 loan. For revenue-based funding, you can get up to $2 million to be repaid from 4 to 24 months, okay, through UpCrunch. For equipment financing, you can be funded up to $75,000 to be repaid over 3 to 5 years. And for invoice factoring, you can actually get up to $5 million to be repaid over 1 to 3 weeks. So that's something to really think about. So, what are the qualifications for UpCrunch? If you remember earlier, I was telling you that their criteria are a little lower in terms of industry eligibility. Let's dig a little deeper here. So, basically, what I want to reiterate the fact that there are no industry restrictions. Of course, your industry has to be legal, right? Your business model, your business has to be legal, has to be legit. Otherwise, they can't really fund you. But one thing I want to say here is that it's important to understand that to apply to like the qualifications to UpCrunch are pretty flexible. Now, the firm doesn't publish any minimum qualifications for any of its products, okay? And this is because number one, UpCrunch is not a direct lender. UpCrunch is a loan marketplace like Lendio, National Business Capital, or Clarify Capital, right? So basically, every lender, every final lender will have their own eligibility criteria. So once you apply through UpCrunch, that's when you will get all the notifications from lenders, and those lenders will tell you what they need for you, what they need from you to actually push your business loan application forward, right? So that's the first thing. And the second thing is that basically UpCrunch takes an advocate approach to funding. Okay, so they basically will work with you, they work on your behalf to make sure that they are getting you the best deals, the best rates, the best conditions. Okay, and that's an important element to really pay attention to. So don't have in mind any specifics to really comply with if you go to UpCrunch. No, the you have a variety of criteria, and you have to see which lenders are interested in your borrower profile to actually get from them your specific like the specific criteria they want you to really fulfill before they can even start to look at your application. Let's talk about how to apply to UpCrunch. So if you are thinking about applying for a loan through UpCrunch, the marketplace today, you first need to understand that they have made things very, very simple. It's very simple for business owners like you and me. So the loan application through UpCrunch takes a maximum of 3 minutes. We've tried it. My team and I have tried it several times, like 2.5, 3 minutes maximum. Okay. So you have to just provide basic information about your business, yourself, and how much funding you are seeking, right? So basically, like if you're seeking 250,000 or 1 million or whatever, you just have to okay. And part of the application process. Sorry about that. Part of the application process also involves actually uploading your bank statements. So they will ask you to provide your bank statements for the last 3 months, for the last 6 months, for the last year in some cases, okay? Because again, the criteria depends on the ultimate criteria, the final criteria depend on the lender, right? So the lender will actually controls the kind of info that you have to provide. And one thing I want to say here is that if you think about if you think about UpCrunch, you have the possibility to actually get things done fast. It's up to you to provide the data that they want as fast as possible. Now, in some cases, they might ask you to produce also your business income tax returns, like your 1065, your 1120S, or your 1120 tax returns. So what happened is that basically, and for the last 3 years, by the way, for the last 3 years, and once you submit the data, UpCrunch will contact you. You have somebody contact you for a quick chat, okay, and then they'll ask you more information about the documentation that you just provided, what your goals are in terms of funding and how fast you want to be funded. And then later on, the representative will review your funding offers to help you select actually the best option for your business, because at the end of the day, they make money. UpCrunch makes money when you get funded. Okay, they get a commission based on like their commission is based on the percentage of the loan amount that they just help you close. So the more they can help business owners close business loans, the better for them. And that's kind of cool from a flexibility point of view. Okay. And one thing I also want to say is that if you think about UpCrunch, you have to remember that they are actually a marketplace, which means they have to deal with multiple lenders at once. Okay. And the cool thing is that you also need to understand that if you have recurring loans through UpCrunch, you can actually benefit from a discount. By the way, like early payment discounts or concurrent funding, for instance. So let's talk about the advantages of UpCrunch and the disadvantages. So one thing I first want to say here is that basically, if you look at UpCrunch, their business model is kind of similar to, like I said, all the other players are doing. Landio, NBC, Clarify. So the bottom line here is that a lending marketplace like UpCrunch allows business owners, allows small businesses to quickly access capital to sustain operations or fuel growth, expansion, inventory, payroll, paying taxes. If you have I would say a dip in your cash flow as a business owner, you want to get access to cash real fast. Now, that cash can come in several forms. It can be a business term loan. It can be a business line of credit. It can be an equipment financing arrangement. It can be a revenue-based financing. It can be accounts receivable factoring. It can be accounts receivable financing. It can be anything. Okay. But the cool thing is that sites such as UpCrunch allow you to actually access that realm of capital providers. So you can start the process with a quick application. Funding options require minimal documentation. Okay. And also, once you actually trigger the conversation, like I told you, you have somebody, a dedicated UpCrunch rep will connect you. Okay. They'll connect you to, they first will talk to you to understand your business and funding needs. Okay. So you have a clear idea about what you can qualify for. And this rep actually will serve as your main contact throughout the process. So if you have any question, reach out to the rep and the rep will answer all questions for you. Okay. And this is really good. People love their hands-on service, their customer service. That's pretty cool. The only drawbacks to really account for is that basically there is no way to know the cost that you have, like whatever you have to pay for the loan. There's no way to know it before you apply, because lenders are so different. UpCrunch is dealing with tens of lenders, tens of lender partners. So your APR in the end could be really way different from your APR if you were to go to a direct lender, for instance. So it's important to understand that when you think about UpCrunch, you have to really you have to weigh speed versus convenience. You have to weigh affordability versus I would say cost effectiveness. You have to weigh all kinds of factors. Okay, so one thing that's really cool is that through UpCrunch, you have a quick and easy online application with minimal documentation. Like some small businesses don't even have, they're not even keeping their books through QuickBooks. They're not keeping their books through Zero. They're not keeping their books through Wave. They're not keeping their books through traditional business software, accounting software. They're doing things in Excel, or if any, right? So that's a little problem, because that just means that if you're looking for a business loan that is asking you for a lot of documentation, you're not going to really attract those business lenders. But UpCrunch does allow you to actually access capital, okay, without they don't have no doc loans, but they do have low doc loans, okay? Low documentation, not no documentation, okay? You have fast turnaround times on approval and funding. I've told you before, 24 hours, that's pretty good. You start the loan application at 10 a.m. Pacific. by 6 p.m. Pacific, you get funded. You get approved and funded. Okay. And you have a diverse lending marketplace with large credit facilities, no prepayment penalties for business lines of credit, possible early payoff discounts for revenue-based funding, and you have excellent online reputation with higher customer reviews. Okay. One thing you need to understand here is that there is no transparency on qualifications you must apply to see if you're eligible. In other words, there is no soft pull process, and that makes sense because this is a lending marketplace. And alternative lending is more costly than traditional business financing because the lenders who are in that space, in this space, the alternative lending space, their risk profile, their risk, I would say, risk acceptance is a lot higher than what you have with traditional banks or credit unions. So, do I recommend UpCrunch this year to you? Yes, definitely. UpCrunch is a legitimate online business lending marketplace. The company has been around for 10 years, nearly 10 years. Okay. So that's pretty cool. It tells you that they have a proven track record. They've been doing something right, and customers are actually liking their approach. So this is a legit business. Now you got to really ask yourself, are you looking for a direct lender or are you looking for a lending marketplace? If you are a business owner, you listen to me right now. Depending on your priority, depending on your funding priority, whether you want to go to a direct lender such as a bank, credit union, or online lender, or you want to go through an intermediary like a middleman, which is what a lending marketplace is, you got to really ask yourself. Now, both options have their pros and cons. If you were to go to a direct lender, chances are you might not be approved fast, but you'll be approved with a lower APR. You, if you're lucky, you can even have an APR in the single digits, like less than 10%. But you can be funded within 3 weeks or 4 weeks. It really banks like to take their time, and it's a pretty bureaucratic process. I mean, for a good reason because they have to check several things. But if you want speed, if you're willing to sacrifice cost to actually acquire speed, go with an alternative lender because alternative lenders will give you the cash real fast, but the APR will be high. So with alternative lenders, it's actually rare to have an APR below 10%. So you're not going to have a single digit APR. Okay, chances are you'll get a double digit APR, and but you'll be funded fast. Okay, within 24 hour, within 24 hours, within 48 hours. Also, I want you to expect if you were to go to an alternative lender, I want you to expect the fact that you might have a repayment window that's shorter. Like they will want you to pay the loan back within 18 months or 24 months, and on top of that, they might want you to really pay every day, for instance, as opposed to paying monthly. They might want you to really pay every day. So those conditions might be a little strict. But hey, listen, as long as you have the cash to expand your business, you should be good to go. By the way, right? So as a coda in today's conversation, I spoke to you about UpCrunch, and I told you what UpCrunch is, how their business loans work, what are the qualifications to apply, and what are the pros and cons. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.